We've got some talented traders at Atmos and some not so great. And in today's video, we're going to be breaking down their accounts and giving you a behind the scenes look of what it takes to become funded with us. We've currently got someone who's holding $13,000 in profit on a live account and someone who's learned a very harsh lesson indeed. So let's get into it. So for the first example, we're going to be looking at this trader. This is one of our fantastic live traders. So we're going to start on his phase one account, $100,000. And the first thing I always look at is their equity curve. How much drawdown were they in? You can see straight away here in this purple line, he didn't have any drawdown in any of his account phase one. So when I look at some of the trades, I think maybe if someone's got no drawdown, maybe they've just done one trade and passed. But this person actually had 14 trades across 4 days, 12 winners and 2 losers. So his win rate was amazing. Now, he only trades gold, which I don't mind because this is someone who specializes in a certain market. And what stands out to me more than anything is his lot size. Look, 100K account, but he's only ever using one lot. And you can see some of the profits on that one lot, 2,000 here. And all of these ones that made the most profit, you can see between that hour and a half and 3 hour periods, this person is more of an intraday trader, not a scalper at all. I know a lot of gold scalpers and a lot of them aren't successful. So this person is a great example of a consistent trader, but that's on phase one. So I want to know if this person has done it across all the phases. So when I go on to phase two, exactly the same thing. Onto the equity curve again. Obviously you have to make half the profit on phase two. And again, 0 drawdown on his balance. It's always been going up until he passed where this green line is. Number of trades 8, trades won 5, trades lost 3. So still a really, really healthy win rate in his trade as well. And he's not deviated away from what he's done. Okay, yeah, he passed it in a much shorter time this time, but he did have to make half the profit. Only 3 or 4 days this time. But again, consistency in what he does. Trading gold, clearly specializes in gold trading, nothing wrong with that. One lot. Okay, there was a trade here where this person held 2 lots for 23 minutes and made quite a lot of profit. But typically this person, or generally this person, has been very, very consistent, never really exceeded 1 lot, never really gone below 1 lot either. There's one trade here with 0.5. I think that was just to pass the profit. So these are all the examples of the trades that he's had, and just a fantastic example of consistency. That's one of the most important things when it comes to prop trading. So then passing phase two into the live, I know how tricky that can be mentally. I want to see if this person has remained consistent when it goes to the live account, because a lot of people start to lose their heads. So when you go to the live account, $13,000 in profit on the live. Amazing. Again, I have no idea whether this is something which is normal. It's not really from what I've seen. But again, no drawdown on the live account so far. You can see this balance in this purple line. It's just shot up. So he's obviously had an amazing day between June the 15th and June the 16th. So let's have a look at that trade. 14 trades won, 3 trades lost. This person knows how to trade gold. Amazing, really. So let's go to the date where he made nearly $12,000 in just 24 hours of trading. So when I scroll down and go to that date, you can see it's these trades here where he made $1,900 and $1,900, both on gold in the space of 1 hour 50. So he's kept that holding period of around 1.5 hours to 3 hours. Now, I don't have a problem if someone holds their trade for 20 minutes, but it needs to be consistent throughout. So like, I'm always a trader who I know holds my trades between the sort of 2-day to 1 week period. So when I go to analyze my trades, I want to make sure that I'm within that period that I'm holding the trades, because that means you're being consistent and it means you're following your rules, which obviously as a trader is one of the most important things you can do. So these trades where he made the most money, again, it's between that period where around 2 hours of holding time. So he knows exactly what he's doing when it comes to his strategy. On that same day as well, there was obviously more trades because he made up to like $12,000. So 2,500 on this one. Look at the duration that he held, 2 hours, 24 minutes. 780 there, 2 hours. 977 there, 3 hours. So this is a great example of someone who follows their rules to a T. And when it comes to prop trading, if you don't have a plan and follow those rules to a T, you're going to end up going off on your own tangent, especially when you have to deal with those mental things like going from phase 2 to live, which can really, really mess with you mentally because there's that added pressure. He's managed to remain calm in that situation and still do exactly what he's been doing on the live compared to the phase 1 and phase 2. So that's the biggest compliment that I can give to this trader. Okay, so now we move on to an example where maybe things weren't done as well as what we've just seen, and that's fine. That happens across all prop firms and all traders. So this trader has a $200,000 two-step assessment phase 1 account. So he's on the first phase. Let's look at his equity curve first of all. And you can see that this balance curve and equity curve, the equity curve shot up, this balance curve has remained in a drawdown. So he's still active. He's not failed it or breached it. Number of trades, 11. Trades won, 2. Trades lost, 9. That's not really a win rate, which is probably going to do you much favors. So that's like winning 1 trade every 4 or 5, which means that you need to have a risk-reward ratio of at least 6 to 1 in order to make a profit across all that time. So I know people that trade only 10 to 1 risk reward, but the problem with that is that you're losing probably 7, 8, 9 times out of 10, and trying to deal with that constantly being wrong. As human beings, we don't like being wrong, and being wrong 8 times out of 10 isn't a nice thing to have to deal with. So I would say there that, okay, if this person's risk reward ratio is 1 to 6, that's fine. But looking at some of the trades that he's placed, the first thing that shoots out to me is this, the lot size, where I'm hovering over now. Across the space of 2 days, 20 lots on AE Swiss franc and 12 lots on AED Swiss franc. So across, what's that? It's actually in the same trade, same time, 3:20 p.m. This trader placed 32 lots on a Forex pair, which is very, very high. In fact, the other thing that I noticed about this is the date, 27th of May. So this trader was in a profit. I think he was up around 14,000, but it was a bank holiday. So the markets were barely moving / shut. So when it come to the point of where the bank holiday and the markets opened again, his position got closed from plus 14k to minus 4k due to the rollover spreads. So let that be a lesson to people. Some people don't like trading fundamentals or knowing what's going on in the world. But if this person knew what was going on in the world and knew there was a bank holiday coming up and the markets were going to be shut, or in some cases barely moving with really wide spreads, having that knowledge would have saved him, or actually would have maybe even passed his account for him. So let that be a lesson to people who are trading with prop firms and trading in general, really, is that we need to know when the active times of the market are, because if you're holding trades across times where markets are shut or when spreads are really, really high, when those markets reopen again, there's going to be big gaps in the market. And if it's not in your favor, you're in a lot of trouble, as this trader found out. Looking through the rest of his trading, I'm a bit uncomfortable with the lot sizes being used on Euro Pound 36 lots. And you can see that he's actually holding the trades for a fairly long time as well, but there's not really much consistency in how long he's holding the trades. That could be down to his strategy. But look, some of them were 8 hours long. That was over the bank holiday. Some of them were as short as 10 minutes. Some of them were open and closed straight away. That might have been a mistake. And some of them were 58 minutes, 2 hours. There's not really any consistency in terms of his holding plan. So this was an example of really what not to do. And I want to end this part on giving you some advice on if you was in this sort of position where now we're at a stage where he's got about 12,000 left on the account. So about 6 or 7% left on the account. I would lower my risk now when I'm in a period of drawdown. The reason is because trading prop firms is about staying alive, not breaching this daily loss target or this maximum total loss target. Okay, so you can see he's getting to about halfway. Lowering that risk basically means, let's say, for example, he was risking 1 or 2% per trade. I would lower that down to something, a fixed percentage of maybe about 0.5% per trade, because it's going to give him that wiggle room that's needed, obviously, because the 200k account is the most expensive one you can buy. So you want to make sure that you're surviving for as long as possible. And the way that I would do that is straight away lower that risk down to about 0.5% in a period of drawdown on the account. If you're confident in your strategy and you know in the long run it makes profit, there's no time limit. So you're not in any rush to pass it. What people tend to do is the opposite. When they're in drawdown, they're like, I need to make this back as quickly as possible. And they start going crazy and start placing not 36 lots on Euro Pound, but something like 50, 60 lots if the account allows them to. And that's the fastest way to blowing your account. So that would be my advice to anyone who maybe is in this position where things haven't got off to the best start. But remember, time is on your side. You've got plenty of time to make the profit back. Lower that risk a little bit more, give yourself some more wiggle room, and just take your time. Okay, so there's some examples there of how to do things properly. If you trust your edge and you're confident in your trading, come and join us at atmosfunded.com, and I'll see you for the next video.